Hey you guys, my name's Jeff. Welcome to the channel. If you've been here before, then welcome back. By the time you get to the end of this video, you're going to understand dividends in a whole new way. Lately, I've noticed that a lot of investors seem really obsessed with investing in dividend-paying stocks or dividend ETFs. I think they believe that they're getting free money from nowhere. But I don't think they know exactly where this money is coming from. So in this video, I'm going to show you where the money is actually coming from. Just a reminder, this is not financial advice. I'm just sharing with you what I know about dividends to help you become a much better and more informed investor. If you enjoy this video, please click like and subscribe to the channel. Have you ever noticed that if you own a stock and the stock pays a $1 dividend, for example, the stock price always seems to drop by about $1. If you own a stock and the stock issues a $2 dividend, then the stock price always seems to drop by $2. Well, if you've noticed this and you've wondered why the stock that you own has suddenly come down a couple bucks or $1 or whatever as soon as it issues a dividend, then this video is going to help you understand why that happens. You'll notice that at the dividend date, when the dividend is paid, the stock price comes down by the same amount of the dividend payout. Dividends are a choice. They're based on the obligation that business leaders have to deliver value to the shareholder. Now, I'm going to share with you guys an example that's going to show you the connection between stock price and dividends. Now, let's say that you own a restaurant, okay? And the restaurant's doing really great business and it's generated a lot of profits and you've been able to save $100,000 of past profits in your bank account. Your analysis suggests that this business can make $50,000 a year going forward. And you believe that this stream of future profits is worth $500,000. Your restaurant's business value is $600,000. It's the $100,000 in past profit sitting in the bank account plus $500,000 in future profits. Think of that business value, that $600,000, as the stock price. If you take $100,000 in cash out of the restaurant as a dividend and put it in your personal account, what happens? The business value of the restaurant just dropped by that same amount. It just dropped by $100,000. So now that business, instead of being worth $600,000, is worth $500,000. This is what happens to the stock price when a company issues a dividend. So for anyone out there who's thinking that you're getting free money when you get a dividend, it's not free money. It's actually money coming from the company to you when it pays you a dividend. So the question that we need to ask is, why do they pay you a dividend? Why does the company send money from their business account to your stock brokerage account or your ETF account or wherever you hold your assets? The board of directors and the CEO of the company look at their options for growth and they say, okay, we're making all this income, all right? We're making all of these profits. What's the most intelligent thing that we can do with it? So if the CEO and the business leaders, all the people working in the different departments, all the managers, if they believe they have opportunities to build new plants or roll out new software or buy other companies that can add value, then that's great. And they will build their business by using the money in the company to grow the company. Amazon is famous for doing that. Tesla, Berkshire Hathaway, whenever they have extra profits, they're always looking for ways to either buy up other companies or buy stocks in other companies, but they find ways to use their profits within the company, within the business. So Berkshire Hathaway, Tesla, Amazon, these are not companies that pay out dividends to shareholders. They keep the money within the business. But if these companies, not those three that I mentioned, but if other companies have so much cash that they can't do anything intelligent with some or with all of it, then they return that money to shareholders. They pay it to you as a dividend. They need to return that cash to the shareholders if they can't think of something else smarter to do with that money. The dividend payout is just a transfer of money from the business to you. Now, Warren Buffett shared some really insightful comments in his 1981 letter to shareholders. He said, logically, a company with historic and prospective high returns on equity should retain much or all of its earnings so that shareholders can earn premium return on enhanced capital. Conversely, he said, low returns on corporate equity would suggest a very high dividend payout so that owners could direct capital towards more attractive areas. So that's really clear, right? If the company can do better things, more useful things with the money, they should keep it in the company. But if low returns on corporate equity would say that the payout of dividends should be high, they should give the money back to the shareholder so you can do something smarter with the money. I own shares of Berkshire Hathaway stock. I have for years. I like the fact that Berkshire Hathaway does not pay me a dividend because I believe that Warren Buffett and all of the people who work at Berkshire Hathaway have a much better likelihood of earning better investment results than me. I believe that Buffett is one of the best asset allocators in the world, and I'd rather he were making investment decisions than sending a dividend payment to me, and then I'd have to decide what to do with the cash. One other example, think of grandparents kind of like being dividend-paying companies. Grandparents are mature. They're like companies that have been around for a long time and maybe don't have a lot of needs for extra money because maybe their house is paid for and they already own a car and they've already paid for their education. They're already mature. So they'll take any extra money that they have, for example, give a gift of $10 to their grandchildren as a birthday present. And when you think about grandchildren, these are not really dividend payers, right? Because they're in the growth phase. A grandchild needs money for their education, maybe to buy some new clothes. When they get older, they might need to buy their first car or find an apartment, pay for school, all of these things. So in these ways, I think the grandparent who is mature, paying dividends is not a sign of weakness. It's a sign of maturity. So I've got something to show you guys. Look at this. I made them. Look, it's a little shirt made out of a dollar bill. Okay, so take a look at these pants. Let's say that they represent your stock portfolio, all right? And let's say you have a stock and it's in the left pocket over here of these pants. Well, if this stock pays a dividend, then what happens is, let's say it moves from the left pocket over to the right pocket. So what's happened here? Well, the dividend payment has just moved from the left pocket over to the right pocket. The value has gone from the left side to the right side, but the total value and the weight of what's in your pockets is the same, all right? You're just shifting money around. Unfortunately, the government sees your money moving from one pocket on the left side over to this pocket on the right side, and they tax it. That may be the best illustration I can share with you about dividends. The weight of the money in the left pocket is the same as the weight in the money in the right pocket, but the taxation happens in the movement between the two. So just remember that a stock that pays a dividend does not create wealth. It just transfers it from the company to your own account in a taxable event. So if you remember just one thing, if your stock pays a dividend of $1, then you can expect the stock price to go down by $1. I hope that you found my explanation of this topic useful. If you like this video about dividends, I think you'll really like some of the other videos on my channel. Please put any opinions and thoughts that you have about this video in the comments section. They always generate an interesting dialogue. If you like this video, please like and subscribe to my channel. As always, I really enjoy seeing you guys here. Thank you so much for watching, and I'll see you in the next video.